Hello, Maverick traders, and welcome out to your daily market roundup. This is Ankit here, and I'll be breaking down today's market price action. It's a Thursday, it's a February 27th. Let's get into it. As always, we'll be taking a look at broader market analysis, take a look at what's happening with the news, take a look at sector heat map analysis, and then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
So jumping into the market analysis, it was quite an ugly day today, as you can see across the board. And if you look at the numbers today, we have a negative across the board. So here we are, Dow Jones down, 0.45%, but the biggest losses were in the S&P, down 1.6, Qs 2.64, small caps down 1.4. Oil was up, but then gold was down. So you can see it was a pretty negative day across the board. So definitely the tech is getting beaten down the most. And then, we talk about, relative strength of weakness. And, there's a lot of places that are doing okay, but then there are a lot of places that are doing the worst right now. So this really comes down to those cherry picking the stocks market. If you look at just trading the broader indices, it's not the easiest task here as we are bouncing back and forth. Here's a chart that you can see, this is not an easy thing to trade. But then again, if you start to cherry pick some stocks, you definitely see some outperformance and see the end of performance. Now, here we are. Where are we ending? I can't believe that, just a week ago when I did this roundup, we were right here. And then after that, you see 1, 2, 3, 4, 5 consecutive down days. So again, that's a big sell-off. And again, bringing us down to the support area. So we still have the support area, from January. So we're going to take a look and see if we find some support. This is still a range-bound market. We are not directional whatsoever. So this is the one where you want to make sure, you're understanding if this needs to be directional, we need to see those lower highs and lower lows. This is just a wide range that we're dealing with. So as we're getting towards the bottom end of the range, I'm kind of curious to see if this does break, or does it do, what it did previously, where it did break lower and then we just saw a rally right after. So we'll find out in the next, coming days. But definitely a big turn in the markets, going into last week, making new all-time highs now at the bottom end of the range. Same thing we're seeing in the NASDAQ, but then again, more aggressive. This is already at the support. One thing we did notice is that it's coming on heavy volume. So definitely there's more activity here, more market concerns. So again, this is where volatility is a little bit higher. You just have to sort of play that market sentiment. And right now, market sentiment seems to be a little bit more bearish. Now, if we take a look at the news for the day, again, nothing really pressing as far as the economic event goes. What we are seeing is the sell-off continues in the equities. Yields are also selling off. So, we're seeing a bit of a correlated move across the board, and the US dollar had its best move today, since December. So there's definitely, more risk off sentiment, and we can see that across the board in other markets. Now, as far as the advanced decline ratio goes, we're definitely in negative days, 75% to the downside. And then here we are with the market breadth plus minus 50 MA. Now we are getting more on the red side here, 59% to the red, and we got 41% in the green. So as you can see, this is market overall, is more driven by these big tech stocks. And you can see the big sell-off that we have seen in Tesla this week. We've seen big moves in other major, this is the one that we're seeing an opposite, where last year, all these things were flying off the shelf, and we saw the broader markets being really strong, but then everything else under the hood was not. And now we're seeing the opposite, where you can see where most of the red is, but then outside of that, we can definitely find areas where they were doing okay. If you look at the healthcare, they're all in a decent setup. So I think this is where you want to rely less on the broader markets, but then be more cherry picking the stocks here based on relative strength of weakness. Now, as far as the outlook goes, I think we are in the -2, a little bit more bearish. But again, when I was looking at the setups, I was able to find equal amount of longs versus equal amount of shorts. So I think this is where I will continue to say, look for relative strength and weakness, buy the outperformers, sell the underperformers. So let's just start with the outperformers here. Here's the first one. We got AT&T making a high base. You can see this will sell off in the market. Has sort of no effect on the stock here. So I like this further, especially if this breaks out of the high base. Here's another one. This is AbbVie in the healthcare. You can see that's holding it better. This is a nice little breakout that we saw, and we're just making a bit of a high base. So again, these are the ones that actually look decent here. This is Progressive, same thing, just making high highs. So these are the ones that are definitely not affected as much as far as the market volatility goes. Now here's the one that getting killed the most here. I like this ARC. You can see that this is a nice resistance that's coming off of, and again at this point it's breaking the key support. I'll be aiming for this get down to at least where it's a 50. So as far as the outperformer and the underperformer, this goes down in the underperformer list here. And then here's another one. We got the Caterpillar, and this is again, despite even market rallies, this is not taking part in those rallies at all. So this thing I think looks nice on a further downside. And the last one, again, this is CCL. With the consumer sentiment down in the low here, I won't be surprised we see a little bit more continuation in that downward pressure in some of these stocks that actually done well on overall in a positive consumer sentiment here. Things have turned from the breaking out to the upside now to the downside. So I think this is where we want to be. Have a balanced portfolio and look at the outperformers, look at the underperformers. I think that's where you do the best. Not the easiest to trade the indices, but I think it's definitely easier when you're cherry picking the stocks here. So market volatility is rising, but like I said, we are getting towards the support area. We want to find out if that support area holds, and if that gives up, I think then markets are more in trouble. Tomorrow we have an important number. It's the core PCE price index. I'll be paying close attention to what happened with the yields, what happened with the markets off that news. And again, if that number comes out inflationary or less inflationary, I think we'll have a bit of an impact on the markets as well. Not a big day tomorrow for the earnings, but I think everybody's just eyeing on to how the market closes this week. We already down 5 days in a row. So I think this is where, market's still under pressure. Every time we rally, we are giving up the gains. Today also we had nice gains early in the day that we gave up and now closing on the lows. So I think at this point it's better to stick with the downside. But if that momentum sort of shifts, we want to shift with that momentum here. So let's see how things end tomorrow, and then we'll revise our outlook in a trading room going into next week. Thanks for joining here. See you in the next one. Happy trading.